when we say we quarter one, we got an absolute of 4.66%, it means if the fund had, let's say, 100 million. If the fund had 100 million, the actual income, the total income the fund has is 4.66 million. Now, when that question is asked about the fund, when does the fund compound?
The conversation continues. Now, I'm going to speed this up a bit because I crashed into Ian's shoot. So I just wanted to, and I've turned it into a CTA without him knowing. But this is what you've written on the fact sheet and the projected returns. You've said, Oak Special Fund targets a return of 20% net of fees. This is a targeted return and not a guarantee. We explained that in the previous video. Go and catch it if you're not, but just say something small about that.
Yeah, we still want to target a return of 20% after all the fees are deducted for the year. As we have said, it's not a guarantee. Times change, risks come, and maybe you want to mitigate on risks, so we don't really have to pursue actively the 20%. But if we got a return, let's say, of about 17.5 to maybe 22.5, we are still within range and reasonable range for our returns.
But then now what happens is people come and they say, but last year you did 29.38.
Last year, if you looked at the
hot seat,
yes. Last year, our target was still 20%. Having done 29.38% absolute, it was an outlier.
And you did that in 11 months?
11 months. It was an outlier, but an okay outlier.
Okay.
But that did not change our target, even this year, to 20%. So we are saying, if we surpass, well and good. But we should be at least within reasonable range of 20%. But if we go much higher, we cannot refuse income that comes from revaluations. We'll be very happy. Yes.
Okay, let's continue with this. So, continue. Total fund return from January 2025 to June 2025.
Yes.
Sawa.
This year we are quite pleased. At least our returns have been quite consistent, as much as we have been growing quite drastically, having moved our AUM, that is assets under management. We moved at the beginning of the year, we are only at 927 million. And now we've reached 6B as at the time of shooting, but as at close of 30th June 2025, we closed at 5.75 billion.
Yeah.
With that, we have been able to achieve quarter one, an absolute
return. What does absolute mean?
When absolute means, and I'll explain with the quarter one. When we say quarter one, we got an absolute of 4.66%. It means if the fund had, let's say, 100 million. If the fund had 100 million, the actual income, the total income the fund has is 4.66 million Kenya shillings. So that is achieved, that is in the bank, that is money in the bank. And when we say annualized, because I want to differentiate between absolute and annualized. Annualized means, okay, quarter one means the first 3 months. So you're saying, if we went on with the same trend, we would earn 18.64%. But 18.64%, that means we would earn 18.64 million by the end of the year.
I get it.
But this is annualized and projected.
It is,
but it's not in the bank. That is not money in the bank.
I get it. Well, the money that is in the bank is the absolute of the whole fund for quarter one. And you're just projecting to say, if we continue at this rate, this is what it will look like by the end of the year.
Exactly.
But I really like what you've said, because you're saying that is the money of the fund, but it may be different because some people have come in. Richie came in October. Somebody else came in February 2nd.
Yes.
That is different, therefore, than what my returns should just because of the entry time.
Yes.
Okay, but let's first welcome that. let's come down to H1. What is H1 25?
Oh, okay. So there is a quarter one, the first 3 months, that's January to March. Then there is April to June, which is quarter 2 of 2025, where we did an absolute of 4.88 and an annualized of 19.52%.
So you did a bit better than. Quarter 2 was done better.
Yes,
Hey, good job, Ian.
Thank you.
You never celebrated. Good job. You're behind the scenes.
Thank you.
You're behind the scenes.
Yes. So
okay.
H1, this is half year one, which we did 9.54%, which annualized is 19.08%. Let me explain. So the actual money for, assuming it was the 100 million, in the bank we would have 9.54 million. But if we did that for the next half, we would end up with 19.08.
Wow.
Now, question, why do we say annualized? Annualized, majority of us conceptualize things in terms of percentages, and the percentages that are usually shared out there in investment is annual return.
So the 20% that you're targeting,
yes.
This is annual.
Exactly.
If you put this in January 1st,
yes.
December 31st,
yes.
If you put 1 million in January 1st, December
yes.
31st, you should have 200,000 from that, which is 20% of that.
Yes.
Okay,
yes.
I understand.
Yes, and that's why if you look at many instruments, I'll give you an example. If you look at the 3 months T-bill, it's around 7%. So if someone looks at it at 7%, but it's 7% per annum, if someone looked at it and said 7%, and then came and looked at our absolute for a quarter and said 4.66, they'll say the T-bill is doing better than us.
That one is 7% per annum.
But it's 7% per annum, so it's not absolute. So you have to look at like for like to compare.
Wow.
Yes.
Okay. Now we've got these things. 1 million invested on January 1st, 2025 would have yielded, first of all, you'll explain what yielded is, shillings 107,162.21 cents by end of June 2025.
I'll just substitute that word with the word would have earned.
Okay.
So Kenya shilling 1 million invested first, the beginning of the year, would have earned 107,162.21 by the end of June 2025, or as at 30th, so half year.
I have a question.
Yes.
That is not 9.54.
Yes, that is not 9.54. It's actually 10.7%.
Yes. Why the disparity?
This is an individual's return rather than the fund's return.
Whoa.
Return of the fund is the average return for that month for the people inside the fund. And we'll find that an individual in the fund will have their actual return being slightly higher or lower depending on the behavior of their account.
Ian, this is so... Okay, the fund constantly has people putting money in and taking money out.
Yes.
This is just an example. It's an example.
Yes.
It's going once.
Yes.
This is an example. If on January 1st you put in 1 million shillings and you've not topped up, you've not done anything else,
yes.
You disappeared.
Yes.
And you're coming to see how much do I have June, end of June.
Yes, this is what you would have gotten. So no top-ups, no withdrawal, no changes. As a normal flow, this is what you would have received.
Wow.
Yes.
This is powerful. So in people's statements, there must be disparity. Because like mine, I'm looking, because
yes.
me, I've topped up. It even becomes better when you top up.
True. Because with top-up now, it's like compounding.
Yeah.
You'll find that if you top up every month, I do the same too. I do the Jilipe. I practice Jilipe before even telling the other clients.
Yes.
So with top up, what happens is this month you find maybe you've earned 13,000. The next month, because you topped up 17. The next month, 21. Assuming the return was consistent,
yes.
you start seeing there's a growth in the income that is generated every month. So that one even helps you to move to your financial goals faster.
Okay, you've brought up a big word, and we're still here. Do you compound, and you talked about in trading in T-bills or in bonds and all of these other things. You also talked about currency exchanges that places, and we'll probably get into more details. But then, do you compound monthly, weekly, yearly? Like, no, don't do yearly, definitely. Daily?
Yeah, it can be yearly.
Compound inafanyika aje? English imekwama.
That reminds me, there's a video that we did on explaining compounding, but I'll explain it on a shorter form and say this. When we say that we are projecting 20% return, we are looking within all the compounding and everything. We are looking at 20% return.
Oh.
What is compounding? Compounding in a layman's term is saying that anytime I put an investment out, so give or take, I have to put 100,000. If it earns 5,000, I get the 5,000. Now I have 105 and reinvest. It now, instead of investing 100,000, let me give a good example. Let's say there's an interest rate of 10% throughout the year. So I can put
10% per annum.
Per annum, okay. 10% per annum.
Yeah.
So I put 100,000 for 1 year. I'll end up with 110.
Yes.
Isn't it? But even if the 10% is split into months, yeah. But I invest first, let's say, for 6 months. If I invest for 6 months, I'll have 105, isn't it? Then the 105, because now it will be half, which is 5%. Then I get the 105 and reinvest
for 6 months.
For 6 months. Now what happens? I'll get another 5 from the 100,000.
And something from the 6.
And something from these other 5. So I'll end up basically maybe having, give or take, let's say 111, which is higher. Because what has happened is the earnings has come back and you've been able to reinvest to make more.
I get that.
Now, when that question is asked about the fund, when does the fund compound? And it's a very broad question because we invest in various assets and these various assets have various maturities. There are trades that we do intraday. So we trade on Euro USD, we make profit and we get the profit today. And I can reinvest it today.
Because you have the cash.
Because I have the cash.
I get it.
But I place money on a fixed deposit for 6 months until, as much as on a daily basis, we are recognizing the income.
Yes.
We are even saying on your income, you have grown, you have grown. This money, I cannot reinvest it until the day I get it at the end of the 6 months.
I get it.
And that's why when we say, how far do we compound? Generally, we can say 1 year, but the best thing is actually looking at it from calculating and saying, don't even worry about compounding.
Just look at the
just look at the return. Yes, that's the safest way.
Again, because on the statement, there's something called, there's contribution. Contribution is what you're calling the top up.
Yes.
And then there's profit stroke loss.
Yes.
Profit or loss.
Yes.
Which you see every
end month.
Yeah, every end month.
As a figure.
Yes.
But that does not mean that that whole amount has been received for us to reinvest. It has not fully been received for us to reinvest. Because some of it can be what we call an accrual. It's earning that is being shown but has not been received yet.
But what happens if somebody exits in that mix of it not earning, not being actualized?
Actually, and that is the fun, and that is the way why we have risk management in funds.
Oh.
In terms of, by the time, so we have placed a call deposit, let's say, a fixed deposit for 6 months.
Yes.
Richie has been earning for 3 months, and we have credited it there. And Richie wants to withdraw. We do not go to the fixed deposit and pick it.
Yes.
Because someone else, let's say Mary, has come in. Yeah? And Mary will benefit from that.
Of course.
So what happens is, immediately we will get the liquid cash and pay Richie up to where he exists, as much as we have not received.
I get it.
And Mary, who has come in, we start earning from fixed deposit, she did not directly contribute to.
I get it.
Yeah, because maybe her liquidity was used to pay Richie.
But then you
she
calculate
continued.
Mary from when she entered.
When she entered, as much as the investment started before she came in, she starts earning from an investment that came much earlier.
This takes a team. This is now back office. Let me call it what it is.
Yes.
It is guys.
Operations.
Oh, it's operations, eh?
Yes, which is back office in all ways.
Okay. This is a bunch of guys just moving pieces.
The good thing, we have systems.
You have systems.
Systems and checks and balances to ensure that the system is doing the correct thing, and we have parallel programs to ensure that whatever is in the system is the correct thing.
Okay.
Yes.
Hey, moving a bit faster. What do you then invest in? Asset classes. Let's talk about then, what does Oak Special Fund invest in? What are these places where you have permission to go?